every quarter, Bloomberg reaches out to investors around the world, tries to get their take on what they think the future holds for them. And this time around, certainly, the European debt crisis is center stage. Dominic Chu has been digging through the latest results. It's a pretty pessimistic view, isn't it?
It's not just pessimistic. It's all driven by Europe right now. I mean, the vast majority of it. I want to show you the highlight, the top level of what we're talking about. We asked the question, what is your view of the Eurozone? What's the economy going to look like? And a whopping 88% of respondents said the conditions there are deteriorating. Only 9%, only less than 1 out of every 10 respondents said that they're stable. And yes, there were 3% that said things were improving. But still, close to 90% think that the Eurozone is going into a bad spot right now. Now, what happens? That leads to this idea that with the Eurozone, is it a place that people want to move money to, or are people taking money away from it? Well, we asked, what's the least attractive investment region in the world? EU. 53% of respondents say that the EU. More than half of them say that the European Union, the Eurozone area, the least attractive investment region. But the U.S. is only about 21%. So as bad as the problems are here in the United States, Europe maybe kind of outshines in a bad way what's happening here in the United States. So as we kind of look at these numbers, they start to really kind of play out this theme of Europe being a bad issue here.
What about investors who think that some of the nations are going to drop out of the Eurozone?
Well, that's been a huge topic because no one thinks that the euro is... Everyone believes that the countries will stay intact, the Eurozone will stay intact. But if you ask our respondents, out of the 1,013 we polled all over the world, they said that over the next year, 40% of respondents think that over the next year, some country will drop out of the Eurozone. Now, if you take it to the next just 5 years, almost 3/4 of respondents think that at least one country within the next 5 years will actually drop out of the Eurozone. So for those people out there who think that the Eurozone, yes, will stay intact, maybe the respondents to our poll don't think that's really the case here.
Yeah, we have probably a pretty good guess about which country they think will drop out.
I mean, we're not going to say anything here, but there's probably a pretty good implication among those investors.
But they're definitely anticipating recession over there, which is not going to be good for these countries to try to pull together and stay in the Eurozone.
Well, and that's the huge issue here, because if you look at the global economy, we know how just intertwined everything is. All of these themes developing, what happens in one spot carries over into another. The global economy, will it lapse into recession? Well, because of all that's happening in Europe, by next year, 43% of respondents think that by next year, the global economy will kind of melt down, go into recession because of what's happening in Europe right now. And if you tack on the next 2 to 5 years, almost 60, 70, 80% of people think that it's going to actually go into a recession because of what's happening in Europe right now.
And one of the things that we just brought up, some gloomy views about China. It's not just about Europe. People are concerned about there are some out there who think that China is headed for a hard landing. But whether or not you agree with that thesis, the Chinese economy, according to the investors that we polled, is slowing down, and it's going to happen in the next 5 years.
Well, Eric, you make a great point, because in the prior financial crisis, a lot of investors, a lot of countries viewed China's economic growth engine as one that would kind of spur global demand, spur the economy back into or out of recession. Well, this time around, investors aren't expecting China within the next 5 years to be growing at that 9 or 10% pace, enough to kind of get other countries out of their economic funk, Eric. That's a huge point as well.
Dom, thanks for bringing us the results of this poll from investors around the world.